You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today, it's September 15th, 2021. Well, there's been a bit of a rally. Every commodity out there is up substantially, some in triple digits, like natural gas, 130%. Uranium just woke up the other day. Stocks are up big. The metal up, about 25% or thereabouts in the past few weeks. And we just see this commodity creep. Everything but gold, silver, and platinum are going way up. The ones that you would really expect to be going up in light of heightened inflationary expectations. What is going on here? Let's talk with the Daily Gold's Jordan Roy-Byrne and find out. Jordan, great to have you back on. So why is everything going up except gold, silver, and platinum?
Well, it's a really good question, Kerry. There's a couple different answers. First of all, gold tends to lead everything in the commodity world, and then silver tends to follow gold. And so if we look back, gold made a huge move from 2018 to 2020. It was exactly 2 years. It bottomed in August 2018. Somewhere in the mid 1100s, if I recall correctly. And then it had a huge move in the next 24 months to almost 2100. So it was close to, I don't want to say it was a doubling, maybe it was 80%, 75%, whatever. That's a huge move in a short amount of time. Silver, we know, moved up from a bottom of $11, the COVID crash low, to $30 in only 4 months. And commodity prices tend, when they spike or have very huge moves, they tend to correct significantly. Even it can be in terms of price and time, or a combination of both. And so that's the technical reason. We had these huge moves. They led everything. Gold and silver peaked before everything else. And gold and silver peaked before these other things started to move, like uranium stocks, for example. They didn't even start to move until the end of last year. Gold and silver had already peaked, even though silver has held up better than gold. It's traded around the high. But so gold and silver, they tend to lead everything. So that's the first answer. The second answer is fundamentally, I know this doesn't sound correct to the listeners, but the market is not anticipating that inflation is going to accelerate. If you look at market-based indicators, they are anticipating that inflation is probably going to recede at some point. That doesn't mean deflation. That's just what the market expects, because if the market thought that inflation was going to continue to accelerate, gold and silver, at least by this point, they would be trading right around those highs, or they would have broken those highs. So gold is driven by falling real rates, and the issue is real rates blew out on the downside. So real rates got so negative, they went down so sharply that they really have nowhere to go but up at this point. And so, the only way they would continue to go down and decrease would be if inflation would continue to blow out to the upside. And so if the rate of inflation, the market is saying the rate of inflation has peaked at whatever the statistics say, 5 or 6%. You could still get 4% inflation over the next year, but that would be less than what it was over the last 12 months or so, which was already discounted by the market. That's the other thing. The market looks ahead by 6 to 12 months. The market is discounting what's to come, and the market expects inflation, not that it's going to come all the way down, but just that it's going to come down a little bit. So it's a combination of technical and fundamental factors. And thirdly, Kerry, the other thing would be, gold moved up. There was an element of fear about the economy. You had COVID, you had all this money was being pumped in, you had shutdowns, people were worried about the economy. How long is this recession going to last? And so that narrative changed quickly to one of, they're pumping all this money in, everything's reopening for the most part. a vaccine is coming. So the market was and has been discounting better economic data because of those factors. And when that happens, that's more bullish. When there's an element of inflation that goes with it, that combination is more bullish for other commodities. It's not particularly bullish for gold and silver. And so when we saw the stock market recovering sharply, money started moving out of gold and silver and going into there and going into the other commodities, because the narrative was growth and inflation. And the other commodities, like I said, uranium, for example, energy, copper, they hadn't moved a lot, even when gold and silver had peaked. So I know that was a mouthful and too long of an answer, but that's my take on why gold and silver have struggled and why everything else has done well.
All right. Well, sounds plausible. So gold was early to the party, but you really believe we're only going to have 4% inflation? Right now, by some accounts, we're having as much as 14% inflation. We could be having the biggest inflationary wave since the 70s, I guess, or since World War II, for that matter. And that was a time of war. We were loading on debt, everything else. Depending who you talk to, we could be at war now, but nobody knows about it. They haven't told us yet, kind of 1984-ish. But, with the rate of everything going up so high and with humongous deficits, you really think they can afford to end QE and inflation's just going to become benign, just a little blip on the screen?
Well, I don't think, in regards to QE, that's a good question. I don't have a strong opinion or expertise on that. So I'll just answer the second part of your question, where I think I can add more value for the listeners. And one thing we have to recall, if you look at, I'm glad you mentioned the 40s and the 70s. If you look at inflation, it tends to be very volatile. So you have, it can shoot up for a couple of years and to 10%, and then it comes down to 3 or 4%, and then a couple of years later it suddenly shoots up again. So historically, history shows that inflation over a long period, even if it's rising, it can be very volatile and move a lot in both directions. And so if I'm saying I believe the market and I think the rate of inflation is going to come down over the next 12 months, I'm not saying that, we're going to go back to 1 or 2% inflation forever. I'm just saying, even if that comes to pass over the next 9 to 12 months, that's well in line with what happened in the 40s and 70s. You had, huge spikes, and then it came down, then it spiked again. And so I think if we're taking a broad view, like a 10 or 15 year view, the secular trend in inflation is moving up. We're going to see much higher rates of inflation. But, the question is, are we going to see that next year, 2 years, 7 years, 8 years, 4 years? At this point, I'm not sure. At this point, I just believe what the market is saying, and that inflation is going to come down a little bit. But, it's possible that inflation could come down temporarily, for 6 or 9 months. But then, we see if gold and silver start perking up and they start outperforming, that would be a signal that the inflation is here to stay, and that, we could be moving into a stagflation realm. To get back to the first question, the view right now isn't yet, the market, it doesn't yet believe in stagflation. But when we see gold and silver, gold specifically, start to outperform everything else, that could be a sign that we're seeing stagflation, that the inflation is going to be sticky.
All right. Well, it's going to be sticky, but maybe not as bad. But it seems like to the uninitiated, the common observer, that the Fed's in a box. They have no choice but to keep buying up treasuries, buying up mortgage-backed securities. They say they're going to stop, but do you think the Fed will really risk a crash to assert itself, its control over the markets?
Well, I think the Fed, it's a cheap response, but the Fed will follow the market. If we see interest rates and bond yields, if they come down, the stock market, by the way, starting to look, who knows, a correction could be starting. But if we get a correction in the stock market the next couple months and bond yields decline, then the Fed will say, okay, look at what the market is telling us. We're in trouble here. We can't reverse anything or hike rates. Now, at the other hand, if the stock market doesn't correct, it keeps making new highs, it outperforms gold, bond yields perk up, commodity prices stay firm, growth is still stable, then they can say, okay, we're going to move to try and do a rate hike. So it's market dependent. We have to remember that, which is why I don't really obsess over the Fed, because they'll just do what the market tells them to do. And at this point, I don't have a crystal ball, but I think, the stock market, I have been, or I should just say, there've been a lot of warnings about the stock market for a while. And, I saw some data from Sentiment Trader. They have their own model where it's based on economic data, which has been getting worse, by the way. And then there's also some technical factors that go with it. And this indicator, when it goes above 20%, I think there's like an average decline in the stock market of 17% over the next 12 months. And so there's 6 other times that this indicator has been triggered. And it happened basically at major tops in the market. The only time there wasn't a major top, I think it happened in 1980 and 1990, where the market still went down at some point. So my point is, if we look back over the last couple months, there has been increasing risk in the stock market, but now we see, where we see this data that they have is really flashing a code red. And, if the stock market, pushes higher here, it could, maybe it's some kind of a blow-off move. And it's difficult to, there's not a huge historical, or not that much of a historical precedent for all this, Kerry, because we had like a 2-month recession. It wasn't like a real recession. And so I think that this expansion, I just think, given the fact that we had such a long, it was a 10 or 11 year expansion, then we only had a 2-year recession, which is basically a shock. Mm-hmm. That tells me this expansion is not going to last that much. I can't see it lasting like 3 or 4 years. It just seems impossible. And so, you have worries about stagflation, and you're going to have worries about growth at the same time. And so it's, looking forward, it's easy to see where, gold is going to go. But, the question is, when is it going to bottom out and start to move higher? But if we're looking 2-3 years out, we are going to see at some point gold will explode higher and break out, trade much, much higher while the stock market struggles.
Mm-hmm. Yeah, so it's just a question of when this eventuality. So what if there's a major market meltdown? We've heard this one as well, and then it's going to take, supposedly it's going to take gold and everything down with it, because for the simple reason that it's the need to sell everything to meet your margin calls, right?
Don't just survive, thrive. The Financial Survival Network.
Doré Copper Mining is a premier, near-term, high-grade copper and gold redevelopment opportunity with tremendous exploration potential only 14 kilometers from the town of Chibougamau in mine-friendly Quebec. Doré Copper is debt-free and owns a 2,700-ton-per-day mill with an 8 million-ton tailings facility ready to be used. There is already power to site, and it is accessible by paved highway and rail. Doré Copper aims to produce a profitable hub-and-spoke operation of over 100,000 gold equivalent ounces per year, or over 60 million pounds of copper equivalent by 2024. Because of the existing infrastructure and location, a low capex is anticipated to recommence production. Doré Copper trades under DCMC in Toronto and under DRCMF on the OTC. To learn more, go to dorecopper.com. That's dorecopper.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, I don't necessarily agree with that, because if we look at history, there have been, if we're talking about a crash, then okay, everything will get sold. But, I'm not sure, COVID was a real black swan. But if we're looking at, what caused the 08 crash or the 29 crash, those types of crashes. The factors then are much different than what we have now. I mean, we don't have I guess we have a housing bubble, but it's not the way it was in 05, 06, where it was the entire financial system was connected to the housing bubble. Like, that's different this time. The banks are in much better shape. The government is giving people a lot of money. So there's more, it's not 2008 or 1929. People who are talking about that, they're not really looking at all the facts or the data. I mean, you can have, if you look at what happened in the late 60s or 1972, 73. I mean, that decline, you had precious metals went up while the market went down. Same thing happened during the tech bust. So there are examples of precious metals diverging from a decline in the stock market. So as long as it's not a crash, I'm not worried, or I'm not selling anything because I'm worried about a stock market crash. And just look over the last year. We were talking about in the your first question, Kerry. Mm-hmm. I mean, almost everything has gone up. Capital has been flowing into those places, and it's been flowing out of precious metals. So, and I've been making the point that if you look at, I mean, it's not just the last 5 years, but it's really all of history. But if you look at the last 5 years, if you look at the three biggest declines in the stock market, they coincided with the best times to buy precious metals. You had end of 2015, summer of 2018, that the market actually started declining while we rebounded at that point. And then you have the COVID crash low. So if you're telling me there's going to be an immediate decline in the stock market of, like, let's say 15% around that level over the next couple months, then I will tell you gold specifically and precious metals are going to do really well next year. So that's a near-term catalyst that I've been looking for precious metals. I mean, if we get that correction in the stock market, that's, not 5 or 7%. It really has to be, I think 12 to 15% at least. But if we get that, precious metals are going to, it's either going to be when the correction happens, they're going to rebound aggressively, or maybe at the end of that correction, they'll start to rebound aggressively. So in any event, Kerry, I'm not, as a precious metals investor right now, I'm not at all worried about a huge correction in the stock market. Now, if I, own something like uranium stocks or, energy stocks, for example, I'd be a little more worried that if there's a 20% decline in the stock market, you could lose some of those gains in those other sectors because they're more correlated to the economy. Gold and precious metal, gold is it's counter-cyclical. Most of the time, it does well when everything else is not doing well. And we tend to forget that because we're just lockstep focused on the COVID crash low in 2008.
Yeah. I got what you're saying. And it's very true. But we could very well, see a crash any second, right? I mean, couldn't we? Right? I mean, isn't that realistic?
I would say a 15-20% decline correction. I think that is more realistic than a crash. I mean, for a crash to take place, you need a black swan like COVID, or you need a huge debt problem in the financial system. I mean, the debt now the government has taken on a lot of that. So I'm not worried about, or I just think the odds of a decline of a significant correction, I would say, yes, that could happen at any second. But a crash, because if you look, Kerry, if you define a crash as 30 or 35%, and you look at the S&P 500 going back, let's say 100, 90 or 100 years, there's not that many of them. They don't happen that much. And so that's, us gold bugs, that's something we have to remember. Like they're not that often. They don't happen that often. But with that said, yes, a bear market and a significant correction, decline in the stock market, yes, that's definitely possible. And, the bigger picture, Kerry, looking out over the next 10 years, the 60-40 portfolio, which is really, it's like the antithesis of, gold bugs and, people who invest in precious metals and take contrarian viewpoints. The 60-40 portfolio, Kerry, if you look over the next 10 years, the expected return for that, it's the worst ever. And if you look at other periods when the 60-40 return was projected to be, close to this bad, you had 2000, You had, I think it was like 1960 or 1965. Then you also had 1929. And you know what? Those were three of the absolute best times to be investing in precious metals. So I know that we're frustrated, we're upset, the decline over the last year, these other things are going up, this sucks, why am I investing in this? The real bull market hasn't started yet. The big move, it's coming, and it's not going to be like 5 years away. It's going to start, I think, sometime in the next 12 months.
All right. Oh, hey, it's a long-winded answer, but I like it. I'm kind of inclined to agree with you.
I forget what the question was. I'm sorry. I get on a rant and I just keep talking. I forgot what I was analyzing in the first place.
That's why we have you on, for your rants. But look, hey, Yogi Berra said the problem with predicting the future, is that, what did he say? The problem with prediction, well, he said, prediction is really hard, especially when you're talking about the future, right?
Exactly.
Yeah. So, that's really what we're dealing with. Who the heck knows? But we do know that, I think Eisenhower said it best. Things are more like they are now than they've ever been before, right? So, hey, I'm a quote collector, you know that. So, so you got to take it all with a grain. But we know that at some point, we do know what's going to happen here, right?
Yes, because we're looking at probabilities. We're looking at objective information. If you look at expected returns for the stock market and the 60-40 portfolio, this is based on data going back, 100 years. The people who calculate these things, they have a lot of inputs, and they say, the expected return for the stock market will be 4% a year over the next 10 years. Well, and maybe it came in at 6%. Yeah, they were wrong, but they were in the ballpark. It's not like the model was predicting 4% and, it came in at like 18% or it came in at -3%. These are probabilities. If you look at for example, I have one chart where I look at the CAPE ratio of the stock market, which is also a factor in expected returns. And if you look at that, Kerry, the peaks in the CAPE ratio, historically, they tend to coincide in lows as far as precious metals versus the S&P. Now, that can be gold against the S&P or gold stocks against the S&P. And so when you look at the CAPE ratio, it hasn't peaked yet. I think it's like a 38. And that's why I say the real bull market hasn't begun yet. And that's because the bull market in the stock market, the one that started in 2009, it hasn't really ended yet. And so, what will happen is eventually we'll get to that point. And, we will see valuations will peak and precious metals will begin a real bull market where they're going to outperform the stock market for, not just a year or two, but years and years and years. And, to get to that point, I don't know what exactly the catalyst is, but obviously valuations are out of control, and economically, maybe it's going to be stagflation or some kind of, accelerating inflation over the next couple of years. Maybe it's we have a double dip recession. It's hard to predict, but it's definitely coming. And just because if you look at the economy, Kerry, it's just a fact that right now, this economy can really not survive without massive government support. If you look at all the political polls, all this money from the government, the majority of voters want that. It doesn't matter what their politics are. They want more money from the government. Mm-hmm. You look at things like UBI. I remember, 3, 4, 5 years ago, nobody wanted that. I remember checking it a year or two ago. It was like 50% of the population. This is before COVID. It was close to 50% wanted UBI. What do you think is going to happen after the next downturn? This economy, this country as it is, it's not going to be able to survive without the government coming in and just supporting the economy massively, giving people money who need it. It's going to happen. It's just these things move at a glacial pace. They take years and years to happen. And so that's what's coming over the next 10 or 15 years. There's just, and it's easy for us free market people to say, oh, well, he's an idiot. Why are they doing that? you were in power and you had millions of people that were going for your head. They're protesting in the streets. They're fighting with each other. There's all these problems are born out of the root of a huge economic problem. And that's why the government, it doesn't matter who the president is or what party or what their beliefs are. Again, the market is going to dictate these things. The next downturn after that, this COVID mini downturn was just a small sample of what's coming. The next one, the government is going to be supporting the economy to an even larger degree. There's going to be more deficits, UBI, they're going to be giving people more money, tax credits for the poor, all that stuff. More of that is coming down the line. And of course, that's going to be hugely inflationary. And that's, and by the way, in addition to that, if you look at the stock market, you're seeing, articles and reports about, companies, they're trying to figure out what they're going to do, how they're going to continue to make money when the population is angry that, workers aren't making any money. They're struggling. These companies treat them like crap. And so you can just sense where this stuff is going to go in the next 10, 15 years. And that's why I'm not, we look at that and we look at all the other things I've said, and it's just based on facts and objective information and probabilities. I don't have a crystal ball. I can't predict the future, but the timing will be very hard. I don't know when the next big move is going to start. It could be 2 or 3 months if the stock market corrects. It could be 12 months. I don't know at this point, but looking out over the next 3, 4, 5 years, the stock market is not going to be much higher than where it is now. Gold and silver are going to be massively higher. I can tell you that.
Mm-hmm. All right. Well, that's what we want to hear. Appreciate you coming on. It's thedailygold.com. Go check out the site and sign up for it. Highly recommended reading. And send us your emails. What do you think of what Jordan said? When do you think gold and silver will finally take off? The email address is kl@kerrylutz.com. While you're at the site, please sign up for our free newsletter, financialsurvivalnetwork.com. Jordan, we will talk to you again real soon. Thanks so much for stopping by.
My pleasure. Thank you so much, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.